What if I told you there's money out there right now waiting to fuel your business dreams and you just haven't found it yet? Now imagine two businesses, one trapped in a maze of loan applications, stacks of rejection letters, and endless investor pitches that go nowhere, and the other effortlessly tapping into potential new funding sources fueled by technology that's rewriting the rules of finance. Now, which path will you choose? Hello, and welcome back, my fellow entrepreneurs. I'm Kim, your host of Small Business Big AI, the podcast where we cut through the noise around artificial intelligence and tech trends to bring you actionable strategies for growing your business. Now, speaking of growing your business, what if I told you there's money out there waiting to fuel your dreams? You just haven't found it yet. Now, maybe you're picturing traditional bank loans, tedious applications, and mountains of paperwork. But what if funding could be faster, more accessible, even revolutionary? Think blockchain, think AI. Now, this isn't some distant future. This is happening now. Now, remember last week, we were cutting through regulatory chaos, leveraging AI to predict, pivot, and profit. Now it's time to leverage AI and talk funding. Now, your dreams need fuel. Your business needs capital. So today, we're unlocking the secrets, traditional funding, alternative solutions, and the revolutionary power of blockchain based financing. Now, whether you're a startup, entrepreneur, a growing small business, or really somewhere in between, securing capital is essential to becoming that technology enabled superpower. Now, that's why each week we explore the strategies, tools, and mindset you need to conquer the challenges of today's business world. And we talk about real world problems. We dive deep into AI powered solutions that help you make smarter decisions. And we discuss the policy changes that need to happen to support small businesses in the AI era. Now, this isn't just another business podcast, it's a community, a movement, and a source of hope for small business owners who refuse to be left behind. Now, we understand that securing capital can feel like an impossible task. Rejections hurt. Investors, they ghost. And banks say no more than they say yes. But here's the good news. Those days of endless rejection and frustration can end now. Because today, I'm going to show you how the smartest businesses aren't just finding capital, they're unlocking it, leveraging technology, and thriving. So, if you're ready to fight for your business, to embrace the power of AI, and to build a future that's bigger than you ever thought possible, well, get ready. This isn't just a conversation about money, it's a masterclass in financial empowerment. All right, entrepreneurs, let's get real about funding. Now, traditional routes sound great until reality hits. Now, to help us untangle this mess and clarify what works in 2025, we've got Karla, our resident funding strategist. Karla, welcome to the hot seat.
Glad to be here, even if it takes a little while.
Perfect. So, getting straight to the point, are traditional funding routes still viable?
Welcome. The traditional route is still viable, but it's often riddled with challenges. So, think stringent requirements, lengthy approval processes, and really a ton of red tape. Now, it can feel like running an obstacle course.
Oh my gosh, yes. It's like you need an Olympic medal in paperwork. So, Carla, rescue us here. What's the biggest blunder you see entrepreneurs making when they seek traditional funding?
Okay, where does start? Probably the biggest blunder is entrepreneurs thinking that investors are charities
Wait, what? Seriously? That's still happening?
all the time. Investors aren't funding your dreams, they're funding their returns. You've got to speak their language.
All right. That's the tweet right there. Huh. So investors aren't interested in funding my dream trip to Bora Bora?
Sadly, no. Or your board dreams will have to wait. There's more interest in funding your trip to your profitability. It's all about packaging your business story in a way that investors can't say no. So think of it as knowing the rules of the funding game.
Now, Carla, many of our listeners might be familiar with Judy Robinette's book, Crack the Funding Code. This offers timeless advice on how investors think. But tell us, what's changed since Judy cracked the code back in 2019? What's different today, especially as we look at the landscape in 2025?
So, Kim, Judy's principles are still solid, but today, AI is really rewriting the rules faster than we can read them. It's kind of like Judy's classic advice, but on steroids. So today we're seeing a venture capital market that rebounded in late 2024. And that was largely driven by the excitement around generative AI. So while the US continues to lead in major AI funding rounds, Europe is also gaining traction. So what we're seeing is a larger average deal size, particularly in early stage funding, which is not influenced by the AI boom. Now, corporate venture capital is also playing an increasingly significant role, and that's really indicating that strategic alignment with larger corporations can be a key funding pathway. So now looking ahead, investors are prioritizing long-term innovation and market stability. And the IPO market, it's also showing signs of a potential revival, which really could impact later stage funding and provide excellent exit opportunities.
Yeah, that's a comprehensive overview. So, for entrepreneurs seeking funding now in 2025, what are the absolute top priorities they need to keep in mind regarding how investors think?
Yeah, so building on Judy Robinette's three C's, which are clarity, credibility, and connection. These still hold true, but they require a 2025 interpretation. So clarity, investors want to see a crystal clear business plan that demonstrates a strong understanding of the market and also a viable revenue model and a clear path to profitability. Now, in 2025, with some economic uncertainty still kind of lingering, profitability and sustainability growth are often prioritized over what we used to know as hyper growth at all costs. So, for AI focused startups, this clarity also extends to explaining the specific problem that your AI solves and its unique value proposition.
So, that's clarity. How about credibility?
Well, for credibility, this really goes beyond just having a good idea. Investors are scrutinizing the founding team's experience, their expertise, and their ability to really execute. Now, in 2025, demonstrating early traction, whether it's user growth or pilot results, or even strong engagement metrics, that is crucial for building credibility. And for AI startups, showcasing the team's expertise in AI development or data science and ethical considerations is increasingly important.
Okay, what about connection?
So, connection is about networking, plain and simple. Building genuine relationships with potential investors. Now, that is more vital than ever. So, while in person networking remains valuable, entrepreneurs in 2025 need to be more adept at digital networking and leveraging platforms like AngelList and LinkedIn to connect with sector specific investors. Now, warm introductions are still highly preferred over cold outreach.
That's incredibly helpful. Now, let's talk about practical strategies. What are some key steps entrepreneurs should be taking in 2025 to attract and secure funding?
Absolutely. So, let me give you a strategic roadmap. Now, number one, you have to develop a robust business plan. Now, this is really your foundation. It needs to clearly outline your problem, the solution, your market opportunity, the revenue model, financial projections, and the go-to-market strategy. Now, tools like Live Plan can be really helpful here.
Okay, so a solid business plan is like the North Star. It guides you and helps you stay on track.
And number two is craft a winning pitch deck. Now, your deck needs to be concise and compelling. Key slides should cover the problem, the solution, the business model, the market opportunity, traction, and financial projections, and the funding needs. Now, you should also use visually engaging templates from platforms like Canva.
Oh, I love Canva. So user friendly, and you really don't have to be a graphic designer to create something pretty slick.
Yeah, that's true. So, number three is to strengthen your financials. Now, maintain clear and transparent financial records. Now, investors want to see a clear path to profitability. So, financial management software like Zero or QuickBooks can really be invaluable.
Okay, this is where things can get a little intimidating for some entrepreneurs. Numbers, balance sheets, it can feel overwhelming. But having those solid financials is non negotiable. Right, Carla?
Absolutely, Kim. It's like showing investors you're not just dreaming, you're building a sustainable business. And next, number four is identify the right funding options. Understand the different types of funding available, whether venture capital for high growth potential, or angel investors for early stage, or crowdfunding for community driven businesses, or government grants for specific industries, and revenue based financing for companies with consistent revenue.
It's not a one size fits all approach, is it? You really got to find the funding path that aligns with your business goals.
And number five, network strategically. Now, attend startup networking events and pitch competition. So leverage online platforms to connect with investors who focus on your sector and seek warm introductions whenever possible.
So it's not just about who you know, but who knows you and believes in what you're doing.
Rule number 6 is validate your product and gain traction. Now, investors in 2025 heavily prioritize demonstrable market validation. So show customer testimonials if you have them and show pilot results or early revenue growth.
Show, don't tell, right? Proof is in the pudding.
Right. And finally, number 7, improve your startup's valuation. Now, demonstrate customer traction, secure strategic partnerships, and showcase strong user engagement metrics. And really be realistic with your valuation.
Don't get greedy, folks. Be realistic and be prepared to justify that number. Now, Carla, you knew you couldn't leave today without us diving into AI, right? Now, given the name of the show, I'm contractually obligated.
I had a feeling you'd say that. So honestly, Kim, AI has flipped the entire funding game on its head. Now, investors, they aren't just impressed by AI today, they really expect it. However, it's not just about saying that you use AI. You need to clearly articulate how it provides a comprehensive advantage and solves some real world problem. Now, investors in 2025 are increasingly sophisticated about how AI and how it will look for practical applications and really a clear path to profitability. Moving beyond just the hype. So, on the investor side, AI is also playing a growing role in due diligence. Now, venture capital firms are leveraging AI powered tools to analyze vast amounts of data. And then you've heard this to also really identify trends and assess a startup's financial health. And they're also using it to evaluate the founding team. So this means that startups need to ensure that their data is accurate and well organized, as AI driven screening processes are truly becoming more common these days.
So earlier you mentioned AI is changing the funding game. So how is that affecting valuations? Going back to that point.
Yeah, great question, Kim. AI companies, especially those with strong IP or a unique application of the technology, and they often command higher valuations. However, investors are also very wary of AI hype. So you need to back it up with solid metrics and a clear business model.
Now, you mentioned different funding options. Are there any particular trends or shifts we're seeing in 2025 regarding the popularity or effectiveness of these routes?
Yeah, definitely. We're seeing a rise in alternative funding models. Now, crowdfunding continues to be a viable option, especially for consumer facing products and community driven businesses. And we're even seeing mid sized companies utilizing it for expansion. Also, Cam, revenue based financing is gaining traction as a non dilutive option for companies with consistent revenue streams. And angel investors, they still remain crucial for early stage funding. Also, you've got corporate venture capital, and it's also increasingly important, offering not just funding but also strategic partnerships. Then there's government grants and competitions, particularly those that are focused on innovation and sustainability. So they're also worth exploring.
So, when it comes to crafting that compelling pitch in 2025, are there any specific elements or angles that entrepreneurs should emphasize to really capture investor attention?
Absolutely. In addition to the fundamentals, I really consider these points for 2025. So first is path to profitability. Now, with the current economic climate, investors are keen to see a clear and realistic plan for achieving profitability, not just some rapid growth. And then today, look at ethical considerations for AI. If your startup involves AI, actively address data privacy, algorithmic bias, and other ethical concerns. Now, look at scalability and long term vision. So, investors are looking for businesses that can scale significantly and have a clear vision for the future. And also, very important is team expertise. Now, emphasize the relevant experience and expertise of your team, particularly in areas that are critical to your business, such as AI or specific industry knowledge. And finally, a clear exit strategy. Now, while it might seem early, investors always want to know how they will eventually get a return on their investment, whether through acquisition or IPO.
So, building on the theme of crack the funding code, relationship building is key. Now, what are your top tips for entrepreneurs looking to build strong relationships with potential investors in 2025?
So, Kim, networking is crucial, but it needs to be authentic and strategic. So, here are a few tips. So, first, do your research. Understand the investor's portfolio, their investment thesis, and stage focus before reaching out. And then seek warm introductions. Like leverage your existing network to get introduced to relevant investors. And you also want to offer value. Don't just ask for money. Offer insights and connections or support where you can. And then be responsive and professional. You want to treat every interaction with an investor with the utmost professionalism and respond promptly to their inquiries. It's very important. And also follow up thoughtfully. Now, after a meeting, send send a personalized follow up that really reiterates key points and addresses any questions raised. And finally, build long term connections. So focus on building genuine relationships over time, not just transactional interaction.
And finally, what are some common pitfalls you see entrepreneurs making in 2025 when seeking funding? And what advice would you offer to them to really avoid these pitfalls?
Well, first is exaggerated valuations. Be realistic about your company's worth.
Ouch. Okay, truth bomb time. Your startup might not be as amazing as you think it is. Overvaluing your business can scare investors away faster than bad breath.
I think it's true. I had the many first solutions from, well, get objective feedback early. The only realistic evaluation and stick to it. Investors appreciate realism way more than the hype.
So, what's another mistake?
Another mistake is lack of market validation.
Oh, I see that all too often. Assuming customers will line up because your product sounds good to you.
Exactly, Kim. Don't assume your idea is brilliant. Investors don't invest in assumptions. They invest in data. Now validate your market early and show proof, not just promises.
And what's another, Carla?
Well, having a poor pitch deck. You need to ensure your pitch deck is clear and concise and really tells a compelling story. Also, not understanding investor needs. Remember that investors are looking for a return on their investment and to mitigate risk. So frame your pitch from their perspective.
Okay, let's hit pause right here. Entrepreneurs, listen up. Here's a reality check. Investors don't care how brilliant your idea is if they can't see clearly how they will make money.
Exactly, Kim. And the fix will clearly articulate how your investors will profit and do it upfront. Investors need numbers, not just narratives.
Whoa, here's a tough love moment for our listeners. If you're stuck only chasing traditional funding sources, you're probably already behind.
Yeah, that's right, Kim. The solution, diversify now. Don't solely focus on traditional VC or angel investment. Look into blockchain, fintech loans, and revenue-based financing. They're not just alternative options. In 2025, they really might be your only realistic options.
True.
So the last two common mistakes are not being prepared for due diligence. Now, investors will dig deep. So have your financials, your legal documents, and your team information readily available. And finally, giving up too early. So fundraising can be a marathon, not a sprint. Be persistent and learn from rejections and really keep refining your approach.
That's fantastic advice. So, Carla, thank you so much for sharing your expertise with our audience today. So, my fellow entrepreneurs, Carla dropped some serious funding truths. And if you're looking to crack the code in 2025, focus on clarity, credibility, and connection. Adapt your strategies to the current market trends and always think from the investor's perspective. But let's take a breath, grab a cup of joe, and talk real life survival. Now, coming up next, Hal's joining me at the coffee table with stories you won't believe, but absolutely need to hear about navigating funding chaos. So stick around. Join our growing community of small business owners who are using AI to transform their businesses. Subscribe and be part of the conversation. All right, grab your coffee, entrepreneurs. It's time for our favorite segment, Coffee Table Conversations with Kim and Hal. Now, this is where we ditch the jargon and get down to real talk, especially today, because who doesn't want to talk about money? Hey, welcome back, Hal.
Always great to be here, Kim.
Now, Hal, I just had an interesting conversation with our friend Karla. She explained that entrepreneurs who effectively leverage digital networking, customize their pitches to current investor priorities, and prepare for more rigorous due diligence, and also explore a broader spectrum of funding options will be best positioned to successfully navigate the funding landscape in 2025. Said funding can be tough, and investor pitches, they're worse than, oh, I don't know, colonoscopies maybe.
Oh, please don't remind me. Remember our first big pitch to the Algorand Foundation? We prepped for it all day, practically forgot our own names. And after all that, we got the very, very, very polite thanks, but no thanks.
Oh, yeah, it felt like getting stood up on the prom night. Only worse because we weren't even at the prom.
Exactly. But what we learned quickly, it wasn't about having a great idea. It was all about knowing the game, knowing what investors wanted, framing the pitch from their perspective.
So true, Hal. You always talk about mastering the rules of the funding game. So break it down for our listeners. What do you mean by that?
Well, first, investors want clarity, no fluff. Can you clearly articulate your business model, your market opportunity, and your competitive edge in just under a minute?
You mean like an elevator pitch?
Exactly. Second, your numbers have to make sense. Investors aren't charities. They want to see how they'll get their money back and then some. Show clear, realistic financial forecasts.
Numbers, clarity. Okay, got it. So what's next?
Presentation. How you package your ideas matters. This isn't just about aesthetics, it's about communicating your story in a way that resonates with the investor.
So that's huge, Hal. Now, entrepreneurs often overlook storytelling. And here's a harsh truth. Too many entrepreneurs think investors will magically get their ideas. Now, spoiler alert, they won't.
Spot on, Kim. Investors just don't want to fund ideas, they fund stories, visions, and leaders they trust. If your pitch doesn't clearly and compellingly tell the story of your business in less than a minute, you already lost their attention. Plus, every investor is different. Tailor your pitch, make it clear why your idea aligns specifically with their interests.
Okay, so clarity, realistic numbers, compelling stories, and personalized pitches. That's your secret recipe, huh?
Exactly. And you know what else helps?
What else?
Technology, especially AI and blockchain, which I know we'll cover in a moment. These aren't just buzzwords, they're accelerators. They streamline the entire process.
So true, Hal. So let's help our listeners stop chasing money and start attracting it. Entrepreneurs, are you feeling exhausted by traditional funding yet? Good, because there's a better, smarter way forward. Now, after the break, we're diving headfirst into blockchain and how it's changing the funding game. Now, this is the moment you become the business that effortlessly taps into new capital streams. So stay tuned. Ready to unlock the power of AI for your small business? Well, don't just listen, become a small business Big AI insider. Subscribe and get ready to dominate. All right, listeners, let's jump into the exciting, game changing world of blockchain. Now, I know what some of you might be thinking. Blockchain, isn't that just about cryptocurrency?
That's a common misconception, Kim. While blockchain does underpin cryptocurrencies, it potentially goes farther than that, especially when it comes to funding small businesses.
Exactly. So, hell, let's paint a picture for our listeners. Now, imagine two entrepreneurs seeking funding, Alex and Jamie. Now, Alex is going the traditional route, bank loans, investor pitches, and plenty of headaches. Jamie, however, decides to harness blockchain technology. Now, Alex is stuck waiting weeks for loan approvals. Jamie secures funding almost overnight through a blockchain powered crowdfunding campaign. And Alex wrestles with stacks of paperwork, credit checks, and layers upon layers of middlemen taking their cut. And Jamie, just a few clicks and transactions are transparent, secure, and directly between Jamie and eager investors. Now, do you see the difference? It's like comparing the old AOL dial up internet to lightning fast fiber optics.
Absolutely. That's a powerful picture, Kim. And it's not just about some fictional story. This is the reality today. Blockchain, in simple terms, is a decentralized digital ledger. Think of it like a public notebook that everyone can see, but no one can alter. It's transparent, secure, lightning fast compared to traditional banking.
Exactly. And within blockchain, now we have different types of funding. So think of initial coin offerings, what we call ICOs. We also have security token offerings or STOs. And then we have decentralized finance, or you've heard that referred to as DeFi.
Let's simplify these terms, Kim. ICOs are a way for businesses to raise capital by issuing digital tokens on a blockchain. Think of it like crowdfunding, but on steroids. It's a digital IPO for your company where you issue digital tokens to raise funds quickly from global investors. And STOs, they're similar, but they represent ownership, like shares in your company. They involve offering security tokens, which are subject to securities regulations. This provides investors with more protection.
Yeah, Hal. And then there's DeFi, or like I said before, decentralized finance. Now, think of traditional financial services, loans, savings, insurance, but it's completely automated without traditional banks. It's truly cutting out the middleman.
Now, you might be thinking, that sounds incredible. But overall, what about regulations? And yes, blockchain funding comes with its own rules. But here's one thing: once you learn them, it's smoother, faster, and far less bureaucratic than traditional methods.
And that's a great point, Hal. Compliance isn't about restriction. In blockchain, it's about confidence. So, ensuring you're aligned with regulations positions your business as trustworthy to investors.
Exactly. And that's why understanding blockchain is a competitive necessity.
So, entrepreneurs, here's your takeaway: blockchain isn't just technology, it's your ticket out of the traditional funding maze. Now, it's faster funding, global investor access, transparency, and efficiency. And the best part, you don't have to be a blockchain expert. You just need to know enough to leverage it. Now, it's not for everyone. The regulatory landscape is still evolving. There are specific guidelines and best practices that need to be followed. You need to know your tolerance levels. But the great thing is more people are using it to stay competitive in today's environment. Blockchain's powerful, but combine it with AI, and you've got rocket fuel for your funding strategy. So, next up, we're unlocking how AI puts you miles ahead in securing capital. Stay tuned. It's time to dominate. If you've got questions or just want to continue the conversation, join me over on LinkedIn. I'd love to hear what's on your mind as we navigate this AI journey together. Now that we've unlocked the blockchain, let's dive even deeper. How exactly can artificial intelligence help you master the game of securing capital? So, meet Laura. Now, Laura's a passionate small business owner with big dreams and limited resources. So, she knew that traditional loans weren't cutting it. And angel investors, well, they kept saying, interesting idea, but it's not for us. But then Laura turned to something revolutionary: AI driven crowdfunding. Now, using AI, her campaign found the perfect audience, investors who were excited and eager to support exactly the kind of innovative idea that Laura was offering. Now, AI analyzed investor patterns, optimized her pitch, and made sure her story resonated with the right crowd. And results? Well, Laura raised double her original goal in half the expected time, and she didn't even break a sweat.
That's the power of smart technology, Kim. Laura's experience is the new gold standard in securing capital. And speaking of I thought it'd be fun to have a quick chat with an AI itself today. So I asked it, what's the best way for small businesses to fund their dreams? Here's what our AI friend said.
Well, now, they are like your strict parents. They got the money, but you've got to jump through hoops. Venture capitalists, they're the rich aunt, uncle, generous but picky. Crowdfunding, they're your friendly neighborhood lemonade stand. Everybody pitches in a little. Blockchain, that's like finding the magic money machine. But don't forget, with great blockchain power comes great compliance responsibility.
That's great.
No doubt. Love it. And the AI's right. Today's capital landscape isn't just banks and venture capitalists. It includes fintech solutions, blockchain platforms, and even private credit markets where AI is helping businesses spot opportunities faster than ever before.
Exactly how an AI powered fintech platforms now help small businesses not just find capital, but also manage their finances better, identify funding opportunities quickly, and even predict investor preferences. Now, in a competitive environment, that's your secret weapon.
Bottom line, Kim, AI doesn't just help you find money, it helps you find the right money.
I couldn't have said it better myself, Hal. Now, entrepreneurs, remember, the money is out there. AI helps you get to it faster and smarter. We've shown you the tools. Now, let's get tactical. After this quick break, we'll package all this brilliance into a practical action plan that you can use right now. So, are you ready to put funding frustrations behind you? Well, stay tuned. All right, entrepreneurs, we've covered a lot today. But before we close, let's take a moment to get inspired because funding your dreams isn't just possible, it's closer than you think. Now, first, reconsider traditional funding options, but approach them smarter. Perfect your pitch, know the investor's mindset, and use AI tools to sharpen your presentation. Now, second, dive into blockchain and fintech. Explore ICOs, STOs, or crowdfunding. Now, these aren't just options, they're opportunities. Remember, Jamie, blockchain based funding turn weeks of waiting into mere days. Now, next, embrace AI. It's your shortcut to understanding investor preferences, streamlining your finances, and identifying the most promising capital sources quickly. So, here's your challenge for this week. Pick just one new funding method we discussed today, whether it's blockchain, crowdfunding, fintech loans, or AI enhanced investor targeting, and take that first step. So think about it. Unlocking just one new capital stream could revolutionize your business. And don't forget, understanding and playing by the funding game's rules isn't about restricting yourself. It's about giving yourself the best possible chance to succeed. Now, go take action. Well, that's it for today's episode of Small Business, Big AI. Thanks again for tuning in. We all know that small businesses are the heart and the soul of the American dream, and the future belongs to those who are prepared to adapt. Because we're not building small businesses anymore. In the AI era, entrepreneurs are building big. We're building technology-enabled superpowers. To entrepreneurs, today you've learned that funding your dreams isn't just possible, it's within reach. From traditional paths to revolutionary blockchain-powered opportunities, the tools and insights we've explored today aren't just theoretical. They're your keys to real, tangible success. Now don't forget, stay connected, share your victories, ask your questions. Let's grow together as a community because your story could inspire the next entrepreneur who's listening right now. Until next time, keep embracing change, keep innovating, and remember, the future of your business is bigger than you think. And the steps you take today will shape the legacy you build tomorrow. Now, I'm Kim, and this has been Small Business, Big AI. Thanks for listening. I'll catch you in the next episode.